Welcome back to the Collective Shift Member Town Hall. This is a session we run every Friday with members. The team here at Collective Shift break down, the week that was in the markets, a bit of macro, only the most important stuff that we think you should need to know about to help you keep up to speed with everything. So I'm joined by Leon today as well as Nick, and we're going to get into some things such as big news with the bank collapses, some Arbitrum news about their token finally. And some other exciting things. And then, of course, with every member town hall, we have time at the end for member questions. So those of you listening on the podcast or watching on YouTube, we do shorten these sessions available to you because then we do have an extra 15 or 20 minutes. So also every Friday that we have time with members to go over their questions that they submit. So we'll get into it, starting with just a bit of a market update. So the past 7 days or so, Bitcoin, has really gone on a bit of a wild ride and is now just sitting around a bit above 25,000. It's actually increased about 16% over the past 7 days. Ethereum is up towards 1,700, up nearly 10% for the week. So, in a sort of a week of turmoil in all the business headlines about the banks and whatnot, we've seen, Bitcoin sort of lead this rally. So I will just add that, we'll get into this soon, but Bitcoin dominance is actually at a 9-month high as well, which is should be a strong signal to you to help illustrate that, Bitcoin has sort of been leading this rally. It's up to about 46%. So, when we talked last week at our member town hall, amidst all the fears about the banks, it was at about 43%. So a 3 percentage point increase when you're talking about something like Bitcoin dominance, that takes a lot to move, like 3 percentage points. So that's probably my most notable sort of, market related stat for the week. But we will, get into things. I might just kick off with Leon because I think we were talking last week as we did the member town hall sort of amidst all the chaos, and I can't even remember where we were up to speed. Maybe just like if you would kick things off with what happened after that. Nick, as someone who was off the grid basically when all this stuff was happening. I might not. You probably got the best summary of what happened because you literally came back to civilization when everything had blown up. So maybe just talk about what your big takeaways from this past series of bank collapses has been.
Yeah, so it's making the news specifically about Silicon Valley Bank, which is one of the biggest banks that serves startups and has a healthy proportion of their customer base with cryptocurrency companies. They, at a high level, just had a mismatch and were poorly run in terms of their assets and liabilities, in terms of when things were due. So looks like they purchased a lot of long-dated treasuries in a wrong time. And then with a lot of faith being lost in the banks, a lot of people went to move and withdraw their funds. It came out that about 90% of their funds were not insured because they served a lot of high net worth clients. So with so much uninsured, I think a lot of these big names started saying, hey, I really need to flee now because if it's not going to be me, it's going to be the other 90% who are not insured. So this just contributed to a bank run that, just meant that Silicon Valley was unable to really just meet their obligations as a bank. And turns out that they had to be bailed out, well, quote unquote bailout, because it's not being called a bailout by, the US government, Federal Reserve. But effectively, they have been guaranteed all the deposits by the US government. So big banking failure, a lot to do with like the macro environment and rising rates that have gripped the market. Key headline there. We also see some knock-on effects with other one like Credit Suisse, I think. So a lot of Swiss banks that potentially, and I think I actually have received some bailouts overnight, which have been developing. So we're really seeing this point in time where a lot of banks are starting to face issues and governments are stepping in to help them and potentially inject a lot of liquidity into the banking system. So I think at a high level, that's what happened. And that's why Bitcoin has started to perhaps do well because, as we all know, Bitcoin was born out of the GFC. The first Bitcoin block, had that. It's no mistake. It had, the article linking to, banking collapse and government stepping in to stabilize the markets. So yeah, Bitcoin's really stepping up in a time where there's a lot of a lot of faith's being lost in some of these banks, and the macro is looking very shaky at the moment.
Yeah, for sure. I think, everyone's all of a sudden been trying to learn, crash course on like banking system and everything. That's one thing about crypto. It really forces you to go down so many different areas, which is what I love. And I know Nick loves that area as well. I'm constantly learning about new areas. But yeah, with respect to the relation to crypto, that as Nick put it, definitely, like very tightly related with the Bitcoin narrative, quote unquote, and even just its purpose or reason it exists. And then maybe we can then talk about another sort of big relation to this whole, how does this relate to crypto and us as investors, is definitely then the other implication was sort of the third bank starting with SI was Signature Bank. And that was like, so we had Silvergate, which we talked about the collapse of that. Oh, well, yeah, collapse, but they voluntarily said, we have collapsed. Whereas, very different to the other two, which was Silicon Valley Bank, as Nick talked about. And then, Signature Bank, which I suppose is still a major bank. I think it was about 28th or so in the US by total assets held. It's been around since 2001. Big bank in New York, which has a lot more diversified offerings and custom client base than something like Silicon Valley Bank, or even to an extreme degree Silvergate, which was even more concentrated. Signature Bank almost got sort of like, people are calling it like collateral damage, and from this terms of Chokepoint, which we've been talking about in recent weeks, and we've been sort of along this narrative. It was kind of just more validation this week that, it's not peddling a conspiracy in a way, but it's just, there's just mounting sort of snippets and evidence that it's just becoming up to accumulating to the point where it's just a pretty extremely strong signal of the US just taking a very strong stance that they don't really want any banking risk in particular exposure to crypto. So that has big implications, which we can talk about after this, maybe about what happens for us in the crypto market and in the US. But was there anything you want to add there, Nick?
Yeah, because it's a major thing that we covered in our monthly reports to keep an eye out for this Operation Chokepoint, which is this idea that governments are perhaps trying to cut off the rails to a lot of crypto businesses to cut off sort of systemic risk from the economy. And it's proven to be something there, and it's not just some sort of conspiracy theory, but it does appear, because there's reports coming out overnight that apparently any sale of Signature Bank, a core tenant, will mean that they no longer will be able to service crypto clients. So if that is true, then it's coming out that, it is quite a big impact. And it's come out that perhaps Signature Bank was not in a position that they were really struggling, in terms of a bank run or not being able to service their deposits on clients. And that sort of government stepped in to effectively choke off a core part of the crypto on-ramp, because a lot of crypto businesses do use Signature Bank for their to bridge through the financial system. So massive implications there if true, and we're sort of seeing this attack on crypto. So it's tough, but this is sort of where I thought our Bitcoin is going to stand up, and it's kind of, I thought it was going to be from a regulatory point of view, which it is kind of. So this is sort of in a way how I sort of saw it playing out actually. That I posted a lot last year that in a world where government's coming for crypto, Bitcoin is the one who will thrive and will, has the most decentralization, has the most on-ramps to buy it and engage with it, and, is the hardest to shut down. So sort of, I think it's positive for Bitcoin, but will be tough for a lot of other cryptocurrencies that are still so centralized.
Yeah, it's weird. Our predictions of, a lot of what you've been talking about has come to fruition, but it's not necessarily a good thing for the industry, but it's still sort of vindicating to see that you were emphasizing this a lot last year. And yeah, to your credit, I suppose it's all becoming true, but it's all a bit rough to take at the time. But
it's more extreme, I think, than people initially thought as well.
Yeah.
Especially when people are coming out warning about this Operation Chokepoint, a lot of people thought people were being too over the top and fear mongering, but it's proving to be actually a lot there, and maybe they weren't strong enough in their language, or so it's, although we might see the crypto come together, because it's going to be a lot of pressure on government here. Even US senators are coming out in defense of crypto, about what's happening at signature banks. So this is going to be one to watch over the coming months.
This is the conclusion I've landed on, Leon. I reckon my hunch is that they don't want to outlaw crypto, but they want it to be just at a handful of banks that are sort of, that are servicing the bigger crypto companies. So, likes of JP Morgan, Goldman Sachs, all those are still like servicing the clients of, Circle, Gemini, Coinbase, Fireblocks, all those sort of big boys. And I reckon that's almost like the goal of the US authorities. Like, they want it to just be that, they don't want these smaller mid-tier ones taking so much risk. But as we've sort of talked about, they almost like are incentivized in a way to take that risk as a point of differentiation. But, for crypto startups, they're not getting a banking relationship with JP Morgan or Goldman Sachs like anytime soon. They're the ones I'm concerned about, and they will probably have to more or less go offshore, or, to your point, Leon, accept agreements by mid-tier ones that basically offer them really egregious sort of fees or terms, like you've got to have heaps of a minimum balance in your cash account, a real capitally inefficient sort of agreement that these crypto startups will be forced to agree on. And to your point, Nick, it's another signal of we basically don't want your business, but we'll offer it to you.
And I'd also say there as well,
yeah,
it's this fact that it's not that the government is coming out explicitly and saying that you cannot do it.
Yes.
But the way that they've done it is effectively doing that, because it means that if you're a smaller bank, you have to pay higher premiums and higher costs, and you can only have so much of your business tied up in crypto, because it try and disincentivize this. So it's effectively makes it unprofitable and increases the overall risk for those smaller companies, because they have to pay if they have insurance, for example, they have to pay it because it's higher risk, and increasing the amount they have to pay there. So it's a lot going on. Maybe we see it, we spoke about last week, maybe we see this moving offshore away from the US, from these companies engaging, which is, I think it's a loss for the US if you're incentivizing all these companies having to move abroad to capitalize on crypto, then probably net negative for the US.
Yeah. And to your point, that it's the mid-tier ones are charging those higher fees. It's arguably fair. It's logical from their perspective, because on their end, they're getting charged a lot more compliance fees and insurance fees to even service these crypto companies. So to your point, it's all coming from the top, and just sending a strong signal through these enforcement or just these banking sort of authorities. But I could talk about this all day, but I know the relation, direct relationship to us investors is probably we've talked enough about that, but it's just, again, I get a question of why do we and all other sort of crypto media talk so much about the US government? And at the end of the day, it's just I still strongly believe, I don't necessarily like it, but it's just I just think it's a fact. At the end of the day, it's just still such a soft power and soft influence on other OECD countries and their policies. I know Australia is really got a history of just basically just following the lead of US stances and politics. And at the end of the day, that's why we're talking about it so much. For anyone who is sort of wondering what's this relation to me living here in South Africa or living here in Sweden or Australia, that's just sort of a bit of context.
I'd probably also go one step further and just say that the main takeaway here is that if you have a lot of these banking collapses as well, the US will be forced to inject a lot of liquidity into the banking system. We may see a situation where they may have to reduce rates, and at the same time, they may have to increase more what is known as QE in the system and increase a lot of the money supply. So if that does happen and there's a lot of systemic risk and there's a lot of issues, then, that we saw what happened in COVID when a lot of this money entered the system and rates dropped. We saw asset prices just skyrocket, and Bitcoin really led that as well. So this is why it matters for everybody, because if more systemic risk and more issues, then we're going to see real impact similar to COVID, when lots of money has to enter the system and bail out people, because, you can't just afford to let Silicon Valley Bank fail, because if you let them fail, then all the startups that relied on them, fundamentally may be out of business because a lot of them just are VC backed and have limited runway to even operate.
Yeah. We have lost Leon, but yeah, we'll continue. And to your point, that's this week has even changed. Yeah, the Fed outlook, and it's basically, I think the reason it's legitimization all this past week for Bitcoin is probably a reason why it is led, definitely, but absolutely we're not discounting another big factor of this green week for crypto in general, as well as including Bitcoin, is that the Fed is sort of, the expectations of the Fed hiking has changed quite dramatically. And we talked about last week, there was about a 50-50 chance, more or less, that they were going to go up by 50 basis points or up by 25 basis points advanced to this week. And it's basically now a 50-50 chance that it's either going to be 0 or 25 basis points, which is quite significant when you're talking about when they will stop raising rates and when they'll start to, that narrative of higher for longer, like rates being higher for longer, is really like started to take a bit of a hit, a bit of a blow this week after all these collapses, because they've seen the sheer risk of all this aggressive monetary tightening has sort of forced these banks. It's been basically a huge reason why these banks have collapsed. And I think that's also another reason why we've seen a green week for risk assets like crypto. So that's just another thing there. So March 22 is going to be the next huge date for Federal Reserve meeting, and that speech in particular and that commentary from Jerome Powell will be extremely extremely important in terms of how much do they factor in these bank collapses, given their economy is still going surprisingly strongly and is also helping inflation be up higher for longer. And that's kind of annoying from the Fed's perspective when they're trying to get it down. It's going to be a real balance of these two policies. So we'll keep you up to date next week after that decision is sort of handed down. But we definitely do need to get on because it's been a huge week. The USDC DP, given it's such a core part of the crypto market, let's just quickly just talk about it, Nick. Maybe just your summary or TLDR.
Yeah, this one's a really interesting one because the very high level is USDC depegged because a lot of people were worried because Circle, the issuer of USDC, held some of their reserves with one of these banks that was in trouble and went down.
Yeah.
So a lot of people really panicked and thought, well, how much did they have? Because it wasn't explicitly clear. They said that it could be up to 25%, although no specifics were outlined. But it turns out only about 8% were held with that person or with that custodian. And it turns out that they're able to access those funds anyway. So the peg dropped to about 88 cents, but rebounded quite quickly and now rebounded, I think, almost to $1, considering that they've announced a new partner to replace the fallen bank that was holding a core holder of their assets. So that one, I think, is a lot of people panicked and really shows how fragile the ecosystem is, because USDC is one of the most highest audited and probably one of the most stable stable coin out there at the moment.
Yeah.
So big one there. And I think if the situation happens again, it's just waiting to see how much is actually affected, because I know a lot of people probably panic sold. Just because they were just unsure, and maybe they're having flashbacks to Terra. Although it is fundamentally different how it's backed.
That's a lot we could go into there. But
that's a little rabbit hole.
That's they continue to just exist, which is like Bitcoin in a way. but they survived this whole collapse as well. We'll move on to a biggest news I think of the last day is really the Arbitrum, probably the biggest airdrop opportunity people were looking for in 2023. Extremely big Ethereum layer 2 solution. So again, for new listeners on the podcast or YouTube, it's just a network. It's its own blockchain that just sits on top of the Ethereum blockchain, gets a bunch of sort of cheaper transactions, low value transactions, and then rolls them up and sends them to the Ethereum blockchain. And that, in a way, is how Ethereum is planning to scale. And that's a major way Ethereum is going to try to scale in the years to come. And so this layer 2 blockchain called Arbitrum has announced, hey, we're going to launch a token to help sort of get away this centralization risk, because it's just a core team that's been building it the past few years. And this is one mechanism they can use to try to, decentralize it, and they like gradually step back. So like, this came out overnight, so I might let you, Nick, and
this one actually kept me up overnight.
I did,
I sort of glued to the screen when I saw it come out. Interesting one, because 11% of the total token supply is going to be airdropped to people who engaged in the Arbitrum ecosystem. And so this really depends on your user activity, whether you provided liquidity, whether you bridged, whether you used its other more centralized platform, Arbitrum Nova, and a whole range of different metrics in terms of like how many times you engaged, how many consecutive months, and a lot like that. So we'll attach the link there to see if you're eligible in the show notes. And as always, be very careful whenever you're clicking these, because there's going to be a lot of like airdrop scammers out there trying to think and get you to claim it right away. But the token is not claimable until March 23. So by the time this goes to air, it might be close to coming. But March 23 for that one. And if we look at the tokenomics of it, they had a really big team allocation of about 40 to 50%, but 40 to 45% just for the team, founders and investors, with those 11% for users, and then about a big treasury of 40+%, and 1% of tokens being airdropped to DAOs in the ecosystem. So massive news here, because I think was the worst kept secret in crypto that Arbitrum token. It's finally here. So it's going to be extremely interesting to see how the Arbitrum ecosystem goes in terms of how organic a lot of their activity was, because no doubt a lot of it was people trying to farm airdrops. So TVL may have been higher than initially recorded. So it's going to be massively important in gauging, hey, which are these different Ethereum scaling solutions have the most organic users and will stay with Arbitrum. And they've got a big war chest now to offer tokens to projects building on Arbitrum to incentivize them to stay and users to actually engage in the ecosystem. I think it's tough, because I know I've talked about Matt a lot about this issue of teams being reluctant to offer extended utility in forms of direct like revenue shares of the network in the current regulatory environment. So in a way, I'm sort of expecting this as a core start for Arbitrum, because the most important thing for Arbitrum is to decentralize and go from a stage 0 roll up to stage 1, which is giving away and turning into a DAO. So if there needs to be any major upgrades to Arbitrum, you're just not going to have one single team being to arbitrarily upgrade the Arbitrum network. So what's going to be created is like a security council, which has a multi-sig of 9 to 12, which will then be able to upgrade the Arbitrum network in case of an emergency. And so the DAO and token holders will be in charge of voting in who sits behind that. So these are the sort of decisions that it may get to announce or get to vote on, and other key decisions such as any upgrades or grants or any network treasury or anything to that regard, the DAO will have utility over.
Yeah, I think Leon, it's a great point. I think the way I think of it is just like the more economic value floating around, sloshing around in the L2 or in Arbitrum's ecosystem, which in time will even have these L3s that they announced, which they might even tie in tokenomics to that. Maybe the layer 3s building on top might have to like stake. There might be something they would introduce. That's what I think Optimism will eventually do, and maybe even Matic. Like it would make a bit more sense to make it more utility or more like value sink for the token. But the more economic value flowing through it, I think it increases the value of the governance token, because it's increased, like it's sort of tied to the influence you could have over the direction of it. And if it's like, to an extreme example, like $1 trillion, like you would then want to have like some sway on the direction of it if it's like pretty clear that it's going to be here for the decades to come in this like extreme example, and therefore that token would have some sort of value. how the hell do you design a methodology to like direct to the influence you can have over it is like very primitive, and well, it doesn't even exist at the moment. And to your point, Nick, they might just be holding back a bit on some more like clear things that they could do, such as fee sharing and things like that, which like are very reminiscent of like a security and things like that.
Because networks like Optimism, they do make money because in the way they settle back to Ethereum, like they do generate fees in that regard. And that's a part which is still centralized because it's still, I think, the Arbitrum team or a few select people who get to order all these transactions and settle back to Ethereum. So that's something that will probably be put to the community down the road. But I think it's a really technical thing that no one's really solved yet or found out a good way. So I'm seeing this as the stepping stone for Arbitrum to become more community-led by creating the DAO and Security Council and broad governance and distributing the token to the community. And then maybe we see in the coming year and years to come, we see more power be granted to token holders in a different variety of different, perhaps utility. So I think a lot to come because they're still such early days in terms of these networks and what they can do and their utility.
Yeah. Just two final comments here from me. I think one, you talked about the organic artificial sort of users. I think one way, I reckon they've recognized that, the team, and they've been like, okay, if we do nothing, like the users will just like rush out. It'll be an exodus. But I think one smart thing they did, just from hearing you talk about the tokenomics, it sounds like they've it sounds like they've allocated them to like the biggest projects and protocols building on top of Arbitrum. And therefore, I think they're just going to, I reckon a lot of these projects will use that as to then create incentives. And because DeFi is a very big use case on Arbitrum, I reckon they will just like put it into vaults and add it to like interest, like yields, like add bonus, up there, boost the APYs. And that might be a good way to retain those otherwise mercenary users who would then just go farm something else. So like, that's why it might be a bit of a lag. It might be a bit of a slow burn to get back to a genuinely accurate. We may never get an accurate thing, like a truly accurate, vision or perspective of what their organic users are, if there are always going to be these boosted yields, which it sounds like, I know Optimism have done this a fair bit with OP boosting. It sounds like this will be a similar mechanism. So watch this space, I suppose. Just the number two observation quickly is that, like 45% for like the team and investors. I noticed they did say when I was quickly reading it before this, it's also for future team members. I think that's another thing people maybe discount when they do that. So it's like I don't know who's hiring, I suppose, like who is the entity. I suppose it's still Off-Chain Labs. But it's another thing. I talked with Nick on a recent YouTube video that we did on airdrops, actually, and we talked about OpenSea. And one of my big reasons why I never think OpenSea will tokenize is because I think they've done 4 or 5 investing rounds, and their cap table is enormous, and there is so many stakeholders at play. If they had to do a token, I honestly think it would piss off the community because they would be forced to give so much of an allocation to those previous investors, where the users would have like such a small, and it would almost drive more users to blur. It would almost have a reverse effect. And so I think that this is a larger allocation than normal because Off-Chain Labs actually raised 3 funding rounds. They went all the way up to Series B, which normally when a project tokenizes, they've definitely done a seed. A lot of them have probably done a Series A. And if they have, like, that's it. Like, that's the final one. And therefore, the amount that you need to give to seed investors and early investors and Series A investors is far less than if a project did a Series B, which is by far your biggest one. So that's just another thing to keep in mind when you're talking about token distributions and what's the funding history of the entity that's sort of stewarded the project and built it. So, yeah. Lot to dissect. Yeah, it's been a big week.
Yeah, it's been a big week. Maybe to finish it off as well, the thing that may be overlooked is they also announced this idea of the L3. We spoke about it before, but to make it very simple, just think of it as an extra layer to increase your speed and the amount of transactions you can do. it's like a L2 for an L2 in a way. So it's kind of like creating its own ecosystem and allowing anyone else to create Arbitrum-like blockchains or Arbitrum-like networks on top of it. And this will change the security guarantees once you're settling back to Arbitrum rather than directly to Ethereum. But that's another big one that's going to be massive, and we could see a lot of projects start building right on Arbitrum and via these different networks. A lot of these blockchains like ZK Sync, Starknet, Optimism, they're all talking in a way about building a network on a network. So it's this idea of creating more scalability, and we can see this is how they're going to try and scale Ethereum, which to me kind of got me thinking whether this is bullish for Solana, because we're seeing so much complexity in here, and you're building layers on layers and layers. There's no doubt going to be a layer on that. So the bull case for Solana now is, hey, we're all scaling so easily in the one layer here. It's much simpler rather than what's going on with Ethereum at the moment. If you can think of like the counter of what's going on, I think maybe this is kind of good for Solana in a way, but yeah, maybe.
Yeah, no, all great points. Just a quick update as well. Major news overnight as well that we've finally got a date for Ethereum mainnet. Appears to be set on April 12th. They did the final of the 4 testnets this week, and it mostly went like all to plan. And yeah, we've kind of talked about ETH withdrawals like quite a bit in previous town halls, and actually Nick and I will have a YouTube video going up next week. So yeah, like withdrawals will be enabled. It looks like April 12th. So
finally here.
Yeah, finally here. And I'm happy to move on with that. We should talk about definitely, sadly, another incredibly large hack, almost $200 million US worth of a bunch of different tokens on like quite a mid-tier sort of like DeFi protocol called, it's actually pronounced Euler Finance for some reason, but I always thought it was Euler. Yeah. But anyway, Euler for some reason, it must be obviously a different language. I just want to explain sort of the big takeaway here, Nick, in terms of So
the big takeaway here is that although Euler Finance, they were audited multiple times, about 6 times, it shows the risks of engaging in these because they added a simple line of code or a couple inputs after the audit, which was then the source of the exploit. So at the moment, they're trying to find out they're actually engaging in this interesting game of messaging them online. The hacker's actually sending arbitrary amounts of ETH to people who are asking for it.
Victims.
Yeah. Which is very interesting.
Crypto.
And yeah, so it's the big key here is that, hey, DeFi has a lot of risk.
Yeah.
A lot of people put too much money into it. A lot of majority of their savings, or like a lot of their net worth, which is terrifying to think about putting it in a smart contract where there's just so many exploits out there. And audits take a long time to happen. This is one of the major things that's stopping, I think, DeFi from growing, is that if you want to create a DeFi application, you have to wait 6 months, 3 to 6 months for conclusive audits, often multiple audits, which costs in excess of like, $200,000, $300,000 for these experts to review your code. And then if you make a change, you have to then get it audited again, as we saw, so it's, I think
you don't have to, but it's always a trade-off. It's like, if you make a minor change, if ideal world orders are available at the ready, you would definitely go get audited. But as we're saying, it's the cost involved for a small startup to always have these trade-offs. They're losing their competitors, maybe gaining on them, and then it's like, do we need to wait another 6 months to get this tiny bit of thing?
And we hate a lot of VCs get a lot of flack, but this is why I think so much of DeFi is VC backed, because they need the money for the audits, and they need the VCs to help them with the audits. So if that's why you probably see so little fair launch products, because it's not going to be reviewed, and they don't have the technical backing there to review the code, from a different perspective.
I will just wrap up another quick point. We'll try to just get through more sad news for NFTs. It was a big month, as I think we talked about 2 weeks ago. February was a pretty quite the biggest month for a while in terms of fundamental drivers, but just continues to be quite some signs of just adoption. Just on the whole is really sluggish at the moment. But Meta, so the entity behind Facebook and Instagram and WhatsApp, I think they announced that NFTs, they're going to pull them from Instagram, and they did, I think, were starting to put them onto Facebook. But that was one of the biggest sort of headlines from 2022 in terms of Web 2 or just traditional tech companies adopting NFTs. And 8 months later or so, they've pulled it. I think NFTs, as I said, have been very sluggish on volumes and just interest from the public. But then I think a secondary factor why it was pulled, I just think would also be performance of Meta. I think these tech companies, all of them, are trying to go towards profitability. You see Twitter's probably the best example of that, where they're just really cutting down on costs. When things are this NFT initiative is a very bull market initiative for in a traditional tech.
I agree. I was actually going to say that it's such a bear market thing to hear. Big companies ape in on a big thing at the top of the market, but then pull the plug at the bottom.
They're losing heaps of money on that sort of AI initiative, or what's that section?
They're investing a lot in metaverse.
They keep losing money, but they continue to be confident that's the way it's going. So they're hemorrhaging a lot of expenses. They did more layoffs, I think, this week. They've continued to do a fair few layoffs, Meta. So, a business decision, but overall, end of the day, if NFTs were doing really well, they probably wouldn't afford it at the end of the day. So, but, there is isolated incidents. Starbucks is still probably one that's going pretty well. Reddit's doing pretty well, all things considered. They're probably two of the biggest sort of, companies that are doing the best NFTs, but we'll continue to just, watch this space. But overall, volumes being pretty bad, and just interest in NFTs is definitely, continuing to dwindle. True. Reddit and Starbucks, to your point, they're two of the only ones that have gone with that strategy. All right, we might wrap things up there for our public listeners here on the podcast and watching on YouTube. We do thank you for joining in, and if you do want to actually join in on these live every Friday as a member, and to participate in the member Q&As that we're about to do now, do head over to collectiveshift.io to learn more about what we do here and to learn more about our membership offerings that we have available. But until then, thanks for listening.
See you guys.